Hey guys, it's Sunday night, June 26, 2016, and I am here to review the trades that I made in the trading week from June 20th through June 24th. I made 12 trades total, had an okay week. Gonna dive in and see what I did well, see what I could have done better here. So first trade of the week, I shorted Netflix at 9:39 on Monday at $93.80. So if we look at Netflix, I see that the stock came in to the day and broke lower right out of the gate. So I made an aggressive trade as it was kind of holding on to losses down here, and I was looking for a move towards 93 to 92 bucks. As it happened, I ended up getting stopped out pretty much right away as the stock started bouncing, and you can see just continued higher. So shorted Netflix aggressively, got stopped out. Not in love with the entry point, but hey, when you're going to be aggressive, you don't always get a great entry point. So it is what it is, and got stopped out. So whatever. Made an aggressive entry, was wrong, got stopped out. Not a great setup, but I'm okay with the fact that, hey, I'm trying to be aggressive. First trade of the week, just didn't work. And what I like is that I did stop out. I honored my stop. It's not like I got ripped all the way, because I stopped out pretty much right here. I wasn't liking what it was doing, and that was around $94.20. And you do see that it ended up going all the way up to 95.60, 95.80. So good job with the stop. Could have been a lot worse. Now, here's the problem. Second trade, 2 minutes later, I short Netflix again at $94.28. Make the same exact trade. This time I do get ripped and end up stopping out at 95 bucks. Just awful, because what am I doing? There's no re-entry signal. This was just a complete forced trade where I let what I thought was going to happen override what I saw happening. There was no signal to go short. The signal would have been if it started then coming back down to the low or holding underneath 94 bucks. That would have been a signal. Or if it rejected 95, I could have got short up here around 95. But that is not what I did in either scenario. I shorted at the exact same price that I stopped out at, which tells me it's just a case of forcing the issue. So total force trade with no signal whatsoever. Extremely poor execution on the entry and exit. Stop loss was loose, and just a really bad trade. No other way to spin that one. Next trade, same day on Monday, it was on Facebook at 10:20. I went long at 113.94. At 10:20, I go long Facebook. So the stock had started out lower, but then bounced up higher. I like this rally that it made. Felt like it had uptrend potential. So my setup was to be going long kind of versus the opening candle and the opening price in general, which was 113.80. So I got long at 10:20 at 113.94. So right here, I like this setup. I had observed some upside price action. My stop loss was underneath 113.60. It almost got hit right here, but it didn't. I stayed in the trade for 30 minutes. However, I end up exiting at 114.05 for a very, very small profit at 10.50, 10.51. So I get out right here, and just looks like a case of where I lost patience. I was not in love with the pace by Facebook, because, and what I mean by that is this move here, you go from 113.20 up to 114.20 in about 25 minutes. And then I enter, and I was looking for a move within kind of 30 to 40 minutes, and you can see here that you were just really sideways for about 45 to 60 minutes before then ultimately Facebook does start popping a bit once it got closer to 11:15 and did make the move I was looking for after I had exited. I'm not super annoyed with the fact that I lost patience because honestly I did not. I remember sitting in this trade and just kind of not feeling that great about it. And look, if I exit because I start to lose confidence in something, then I'm fine with that. So first of all, good setup for an entry. I think my entry point made sense. Good initial patience. Just lost confidence in the trade and exited into sideways action. Could have held longer or placed a stop at break even, but I understand why I exited. Lack of pace, and the reason that's important to me is my style is to kind of trade faster paced movement, fine line between trying to improve a weakness and trying to put yourself in spots you're comfortable in. This was one where the weak side of the line got the better of me. Need to get better at trading these grinded out type moves. Grinded out type move to me, this is a perfect example because Facebook goes from 114 to 114.70 in an hour. It takes 1 hour for Facebook to move 70 cents. Some days Facebook can move 70 cents in 5 minutes, 10 minutes at the most. So that is what I mean when I say grinded out type action. Next trade was on Amazon at 12:10. And this is another one where I remember it just kind of being a forced trade. I was kind of bored. Decent setup. So I got long Amazon right here, and I was playing it just for a quick bounce. And the reason I like this setup when I looked at it is because it just kind of went straight down after being in a nice uptrend in the morning, and I like buying those first breakdowns for a bounce back up, and Amazon did do that. So that's why I like the setup. Why I don't like it is because between me and you guys, I was just about to head out and go do something that I had a commitment for on this day. It was about lunchtime. I had a meeting. And I glanced over at the screen and I said, oh, I think I can squeeze out a quick trade here before I need to leave. And so that's what I tried to do. But Amazon, you can see 8 minutes later I get out at basically break even. And again, because I was kind of pressed for time. And so even though I like the setup, I just don't like that I'm kind of making a trade here when I'm about to get distracted by something else. So somewhat of a forced trade based on the circumstances, even though I do like the setup. Just need to do a better job avoiding distractions. Next trade, now this trade I did like. So remember I had shorted shorted Netflix at the open 2 times and was incorrect both times. Now what I did next is I adjusted my strategy. Instead of shorting Netflix outright, at about 12:10 I started to say that, you know what, hey, this stock has peaked for the day. I think it's done going higher. Wasn't sure that it was going to go lower, but I was pretty confident that it was done going higher. So what I decided to do is I decided to short a call, betting that a little sideways trend or slightly lower trend, I'd get theta working in my favor, and maybe the price would start to work in my favor. So I shorted a Netflix call at 12:10, and what I like about this play is it's an adjustment from something that didn't work earlier. Instead of banging my head against the wall a third time, I changed it up a little bit. And as you can see, Netflix had kind of came off the high pretty cleanly. That's what gave me confidence that she had peaked on the day and had started to enter a sideways consolidation. So I shorted a call right around here, and I placed a 20-cent stop loss on the call and a 30-cent profit taker on the call, and then just kind of went about my day and did what I needed to do. And 2 hours later, Netflix I was able to cover the call at $1.23 for a 20% intraday gain, which is very solid. And that cover occurred at 220 as the stock kind of started downtrending here. I got covered into this. So I really like this trade mainly because of the adjustment. Shorting stock outright didn't work, so hey, this time now I'm going to short a call, see if that works, and it did indeed work. So I gave my overall bias a chance, and I gave it a chance in a more efficient way. So like this trade a lot due to the bias that Netflix had topped out. Felt like it was good risk reward. And most of all, I like the adjustment. Going with short calls as opposed to short stock, which didn't work for me earlier in the day. Obviously, short stock would have worked as well, but hey, you know, that's beside the point to me. My trade worked and it worked well. So good execution and good confidence. Good confidence to re-enter this trade after it did not work for me. Re-enter a similar bias trade after it had not worked previously. Kind of stuck to my guns. And it wasn't stupid confidence either, because finally got a signal with this move down that Netflix had topped out. Next trade of the day, well, that was it for that day. So then moving on to Tuesday, June 21st, I bought puts on Netflix at the open. Shorted Netflix, so let's see what was going on here. All right, so I really like this trade overall, at least the entry, because similar to Monday, Netflix broke lower right away, and I got short at 936 this candle. So I got short once Netflix, tried to bounce a little bit but came back down. Remember on Monday, first trade of the week, aggressive short trade on Netflix, it didn't work. Well, guess what? This second trade, or second day of the week, what do? I make another aggressive short trade on Netflix, and I like that because you know what, this one works. And I remember watching this thinking in my head like, okay, it's the exact same setup as yesterday. Yesterday didn't work. Do I have the confidence to try it again? And I did, because I felt like it was more aggressive on this day. In addition, it broke below Monday's low right at the open, which kind of gave me some confidence, gave me a short signal. And then when it did try to bounce, I was watching level 2. It does this bounce right here, and it came right back down. So that was enough for me to get in on the short trade. I entered a put at 936, and I exited the put at 954 at a 15% gain. Really like the entry execution. I do not like the exit execution. I was targeting a move down towards 92 bucks, and I took profits at $92.50 right here. So there was 50 cents more that I was looking for, and I took profits just as it was finally starting to break and start to go my way. You have these wicks right here where it kept bouncing up. I held strong in this, and I held strong on this bounce right up there. And I like that again because it shows confidence when I look at it. It's like I was able to absorb that, let that bullshit happen, because it was never coming back above this 93.25 level, which was the reference point I was trading against. So I like that. What I don't like is that just before it starts to work, or just as it's starting to show signs that it's really about to work, I take my profits and miss out on the move I was targeting. So a good case of initial confidence, but I wasn't able to maintain that confidence, obviously. Otherwise, if I was, I would have caught the rest of that move. So started out, good aggressive entry, good confidence to try the trade in the first place. And also, I like the signal being a breakdown below Monday's low right at the open, followed by a weak bounce. So I like that signal. Good initial patience as well. Held through some sideways action as the stock kept coming down. However, wasn't able to maintain that patience, which to me shows a lack of consistent confidence, as I took profits just before my targeted move occurred. Still a solid, profitable trade, but should have been better based on the setup. Next trade was June 23rd. I did not trade on June 22nd. So June 23rd, I shorted Tesla by buying puts. So let's look at Tesla on June 23rd. I got short pretty much right away on Tesla. I bought a put at 932. And what I like about this, again, another aggressive entry on Tesla. So what I liked is that pre-market it was under pressure. Let me just confirm that. Yes, so let me make sure I'm looking at the, sorry. Okay, so in the pre-market, it was under pressure. So the day prior, it was around 197s. And then pre-market, it was gapping down. So I like the gap down during the pre-market. And then just ahead of the bell, you tried to rally a little bit. You see this right here? This is pre-market action. You tried to rally. Then as soon as the market opened, boom, right down. And furthermore, I had a nice round level, 195. I love $5 levels. So I got short right away because I liked the immediate move or the immediate give back of that bounce pre-market ahead of the bell, and I liked the break below 195. So I bought a put at $1.78 at 932, and I sold it at $2.25 at 939. I was targeting move to 193, and I did a good job holding for that move. I caught about 2.5 points right here from 195 down to 193, even printed 192.50 a little bit underneath that. So really good trade. Of course it looks good because it went my way, but you know, this is just something when you make aggressive entries like this one, look, it's either going to work and you're going to look really good and you're going to feel really good about it, or it's not going to work and you're going to say, oh, well, maybe shouldn't have been as aggressive. But you can't play that game where if you decide to be aggressive, you can't then be like, oh man, I shouldn't have been aggressive. I saw a signal that I felt gave me a reason to be aggressive, and I acted on that signal, and it proved to be the right decision. So I like this. I like the aggressive entry right away, shows good confidence. And I like the hold for my target. So good entry and good exit. All around good trade. Now remember, I said if you're going to be aggressive, you can't play that game where you second guess yourself. And you can see an example of that. So I exit that trade at 225. I take profits. Then I get back in that same put at 198. I flip back in. I'm being aggressive. Being aggressive worked for me the first time. So I enter at 945. I short Tesla again. What I like about this is I'm watching Tesla and I get short right here into this bounce. I feel like I get a great entry because as you can see then it starts to roll back over, and really this was more of a level 2 trade than a chart trade when I was watching it. But as you can see, it did reject the first 3-minute low from the open. So when you look at the chart, that's kind of what you see. So I get short again, another aggressive trade, and right here I'm thinking, yes, great job. Good job being aggressive. However, it was short-lived because then, as you can see, you make a rip to the upside. So I end up stopping out at $1.77 at 10:03. I really like my stop out. It was very instant. As soon as I saw this on level 2, I was like, nope, that's not what I wanted to see. Get out. Something ain't right. Wait for a better signal. So I did just that and, cut the loss. And if I hadn't cut the loss, as you see, Tesla went all the way up to 196s, could have been in a bad spot and given back all of my profits. As it was, I only gave back half the profits, 26% gain on the first one, 10% loss on the second one. And I like this trade. This is a great example to me personally of a trade where I lost money that I still think was a good trade. I think a lot of times we say, oh, if we lost money, it was a bad trade. I don't think that's the case. I think there's a lot of trades that are good trades that still lose money, and to me this was one of them. So good aggressive re-entry again on the first winning trade. I really like that I'm revisiting the winning trade and pushing it. I liked what I was seeing from the short side of things, so I gave it a chance again. Looked good at first, but then it reversed on me. And good stop out. I was very quick to react to something I didn't like, which makes me happy. Lost money on this one, but felt like it was a good trade with good execution. Trade number 9. So later that morning I shorted Tesla again at 11:08. Bought a put at 113, sold it at 135. So 11:08. Okay, so what I like is on Tesla on this day, 195 and above was no man's land to me. I was not going to trade Tesla between 195 and 200. If it got above 200, then I thought Tesla could go higher. And if it was below 195, then I thought she could go lower. So I bought a put at 11:08, and what I really like about that is we get this move down and then we go sideways, and look at where we're going sideways around that 195 level that I was eyeing for a short trade. So I bought a put right here as it was starting to look like it was losing that 195 level. So good patience for me, I felt like, as far as waiting for a setup to come back in my favor and then executing and entering once I felt like that setup had triggered itself. I like this also because if you start popping above 195 at all, I'm just going to stop out. So very low risk in my view. Whereas if it can make its way back down towards that 193 to 192 low a day, I have a nice profit potential. So I bought the put, and I did get a profit out of it. Sold it at 135, 20% gain. Sold it at 11.46. Was in this trade for 38 minutes. Exited at 11.46 into this move here just about. And just really good patience. Caught this leg down, held it while it was going sideways, and then caught another leg down, took profits just above the low a day, as that was the move I was targeting. So good job. Thought that was a good entry and a good job in one of those grinded out type trades that I talked about earlier on Facebook. This seemed like another major grinded out type trade. So overall, liked what I did there. Waited for the setup back below 195 and then entered. Good patience and good job holding through the grinded out type action. Got a decent move. Took profits where I saw fit. Overall, solid trade. Trade number 10 was Friday, shorting Tesla. So Tesla, I bought a put at 944. That's not the day I'm looking for. Okay. Bought a put at 944. So Tesla started out higher, and I bought a put right here, and what you can't see from the, well, what you can see is that 195, right? That 195 level is getting tested. That's what you can see. What you can't see is that 195 was the low from the last hour of the day on the previous day. And those of you who are with my service, you know that I like keying in on that range from the last hour of the previous day and using that to guide some trades. So I got a put on Tesla at 84 cents and sold it for $1.15 pretty instantly. This was like a 60-second trade. Not even. 50-second trade. In at 944 and 58 seconds, out at 945 and 43 seconds, in at 84 cents, out at 115. 37% gain in literally 50 seconds, less than 50 seconds in fact. So really like this one because risk and reward, again, very close to my stop loss when I took the entry. My stop loss was legit just going to be any move above 195, and just got a perfect fill on that 95 test. Immediately placed my sell order at 115 and got filled right here. That's expiration Friday. Well, it doesn't take much. It just moved down $1.50 and I was able to get a fill. So it's like instant coffee. Nothing better than those quick ones. So good entry from risk reward perspective, as 195 round level and previous day's last hour's low was being tested. Also good job placing sell order instantly, because if I hadn't placed that sell order instantly, I probably wouldn't have filled, because then it went sideways and bounced back up. I would have held for a lot longer to have gotten my fill later in the day. So that was a key component to this trade. Good fast execution. Next trade was buying SPY calls, the 205 strike calls at 1027, just about 1028, made a 15% gain, in at 162, out at 186. So let's see what was going on with the SPY. So we had the gigantic gap down in the market on Friday, but then we actually started going higher off the open. So I had seen this move higher and kind of felt good about that move higher. I thought it was a good strong recovery, so I wanted to go long versus SPY 205, and that's what got me long, because you make this pullback right here and you can see this sideways action right here occurring just above 205. 205 down here. Was going to be trading versus that level, was watching level 2, and I was actually watching ES level 2. I like watching the ES when I make my trades on the SPY options. But so bought this pullback and then sold this little bounce back up, and then the plan was to get back in if it could establish above 206, which it could not do, or get back in on consolidation that I felt like was setting up for higher prices. So all in all, good entry. Well, honestly, actually, let me take that back. It's an okay entry. Not a great entry because you weren't especially close to 205. You're still a little bit of ways away from it. So okay entry, and took quick profits. I think I was in and out within 5 minutes. Yeah, I was in and out within 3 minutes. In at 162, out at 186. Kind of like that I was trading quickly because Friday was so volatile that you just don't really know what's going to happen, and things can turn around quickly against you. But I would say this was an above average trade, but not a for sure good trade. Next trade, then I got back in SPY calls at 10:54 after about 24 minutes of watching. So I got in at 10:54, and that was right here. I felt like SPY was about to break out and start trending higher and taking out what was the high of day. This entry I like even more than the first one because at this point now I've got a clear consolidation to trade against. If it breaks down below this low, I was going to stop out, and unfortunately for me that is what happened. I got in at 10:54 at 106, sold at 10:59, just actually 10:59 57 seconds, so just about 11 o'clock, and you can see pretty clearly what that was. That's this breakdown right here. Stopped out as it started to come below that channel low. So good job exiting when I said I was going to. Another example where for me personally lost money on the trade, but I didn't think it was a bad trade. Thought it had a good setup, just got it wrong. I was on the wrong side. So picked the wrong side of the trade, but thought the execution was solid, had a clear level to trade against, and honored my stop loss once the long trade was negated. So overall for me, if I take away those first two trades of the week, I had a pretty solid week in terms of the statistics I pay attention to. I have been trading very poorly since about May 1st, I would say, even maybe since April 1st. I just haven't been consistent enough. So I came into this week with an intention to trade extremely small, even smaller than usual, and that's what I did this week, and really like the percentages. Again, after I get past these first two trades, if I look at number 3 through number 12, really solid percentages, especially number 5 through number 12. 20% win, 14% win, 26% win, 19%, 36%, 15%, and biggest losses on options, which those of you who trade weekly options, you know it can be hard to keep losses small when you're wrong. Only a 10% loss and then an 18% loss. So really liked the execution from trade number 5 through trade number 12. Seemed to be confident and calculated. You know, I got in at levels that made sense, where my stop loss was nearby and target was farther away. This is reflected in the solid percentage gains versus losses that I had. Only real beef is the first few trades that I made on Monday to start the week. Seemed somewhat forced. Some things I could have cleaned up. was that Netflix trade on Tuesday had a great setup and good initial confidence, but got out too early. Still need to work on proper confidence. I use the term proper confidence because I think a lot of times confidence can be misguided. There's a fine line between confidence and stubbornness. Stubbornness is when you get in a trade, it goes against you, and you just refuse to admit you're wrong. And, some people I think confuse that type of egotistical approach for confidence. Whereas confidence, or pure confidence, proper confidence as I say, is when you've observed the setup, it makes sense, you're in the trade, it's respecting your setup, and it's doing what you need it to be doing in order to stay with that. That is the type of setup that gives me proper confidence, and I had that on Netflix, and I had it initially, but I didn't have it all the way through. So overall solid. Also, like the small time approach, haven't been trading well, so trading small to try and get back into a rhythm. Overall grade, give myself a B- for last week. All right, as always, encourage you guys to review your trades, see what you're doing well, see what you're doing poorly. Good luck out there.